Welcome to Capital Currents, where the flow of business news and market trends keeps you ahead of the tide. I'm your watchdog, and today is Monday, July 28th. Before we begin, I wanted to remind everyone we do have a daily newsletter delivered right to your inbox for this podcast, if that form of content is what you prefer. We just hit 1,000 subscribers for the Substack, and I can't thank the readers enough. The link is down below in the show notes. In today's episode, we'll tell you about Trump's trip to the Federal Reserve. We'll also discuss more delays at Tesla. And finally, discuss the issues going on over at Intel. We got a great show for you today. Let's go. The stock market continued its steady climb up this week, with both the S&P and Nasdaq rising about 0.1% for another record close. But the real drama yesterday came when President Trump stopped by the Federal Reserve building for a tour with Fed Chair Jerome Powell. As we've talked about on the podcast for weeks now, the president has been putting a lot of pressure on Jerome Powell to cut interest rates. On Friday, Trump put on his hard hat and stopped by to check out the renovations himself with Jerome Powell as a tour guide. During the tour, there was an interaction that is going super viral, where President Trump and Jerome Powell disagreed on the cost of renovations. After the public accusation, President Trump once again asked Jerome Powell to cut interest rates and even give him a nice slap on the back. Trump is going to be disappointed next week when the Fed meets on interest rates because right now, the markets are only pricing a 2% chance of a rate cut. So it's probably not happening, but it's going to be interesting to see what Jerome Powell says in the press conference. I'm definitely going to be tuning into that on July 30th, and I'll keep you guys in the loop next week. Let's run through some headlines, starting with Tesla. We broke down Tesla's disappointing Q2 earnings on Friday's show, but we didn't really talk about Tesla's robot program, Optimus. Well, we just got some new information about Optimus, and it looks like the company is running behind. Elon Musk originally said that Tesla would produce 5,000 Optimus humanoid robots this year, but Tesla's only built a few hundred robots so far. Elon is claiming that robots could eventually be bigger than the EV business and help push Tesla's market cap to over $25 trillion, which is equivalent to the GDP of the entire United States economy. One of the biggest challenges they're trying to overcome right now has to do with the robot's hands. Tesla wants Optimus to be an all-in-one robot with the ability to do handiwork, work on the factory floor, play the piano, fold some clothes, so they need the hands to be just like humans. But they can't seem to get that right, and to make matters worse, Optimus's head of engineering recently quit, and a former Tesla employee left to launch his own robot hand startup. Elon is not backing down. He's pouring billions of dollars in R&D into developing Optimus, all while Tesla's car business continues to decline. Now, Tesla did show off the Optimus robots to the public this week in LA, where they opened up a futuristic drive-in diner staffed completely by these robots, and there were multiple Optimus robots serving popcorn to people. Let's shift gears and talk about another company having a hard time right now, Intel. Intel has been going through a rough patch pretty much this entire decade, and according to their latest earnings report, things aren't getting any better. The company reported a loss of $2.9 billion in Q2, which is almost double what they reported in Q2 of last year. So their financial health continues to get worse, and in fact, this was the company's sixth straight quarter of reporting a loss. Intel did bring in a new CEO who took over the company in March, and he has a lot of work to do to turn things around. He's making some big moves, though. He started off by announcing a ton of cost cuts. Intel is planning to cut 15% of its workforce, and they also canceled plans for a new chip factory in Europe. Zooming out, Intel's business is getting crushed on all sides. If you look at their chip business, they're still dominating market share when it comes to chips used in laptops and desktop computers, but that's not where the money is anymore. Today, it's all about AI chips, and they don't have anything close compared to NVIDIA or even AMD. And then if you look at their foundry business, which is the manufacturing of these chips, that can't compete with the likes of TSMC. So they're getting cooked on all sides here, and that's why their stock has dropped over 25% in the last 12 months, and it's down another 8%. That's all the business headlines I have for you. Let's take a look at some stocks. Decker's shares are jumping this morning after the shoe giant beat earnings estimates because of solid performance in both their Hoka and Uggs brand. Hoka saw a near 17% increase in sales for the quarter, while Uggs was around 19%. That was a nice bounce back for the two brands, which saw a slowdown in growth in the previous quarter. The acceleration in growth has investors feeling bullish about the company, and Deckers is up more than 12% this morning on this news. On the flip side, shares of Charter Communication are plummeting this morning after the cable giant missed earnings estimates. Charter owns Spectrum Cable, and their revenues only grew by 0.6% year over year. The company reported a loss of more than 400,000 subscribers across their video, internet, and wireless voice services, which just proves that cable continues to slowly die. Charter recently agreed to a deal to acquire Cox Communications for nearly $35 billion, and these cable companies are consolidating to save whatever they can of their business. If this deal gets approved, it would add an additional 6.5 million subscribers to Charter's 31 million subscribers overall. But investors are nervous about the future, and shares of Charter are down more than 11%. That's all for today's show. Keep navigating those waters and see you tomorrow.